Hello, everybody, and thank you for joining me today. It's Alan Barry Labakan with the Rocks and Stocks News Show. Got gold and copper on my mind today. There was some exciting action in both gold and copper. A lot more exciting in copper, I think, than gold, but we'll start with gold. Today, the Federal Reserve met. They decided to leave interest rates where they were to the chagrin of Mr. President Trump. He really wants them to lower interest rates while also saying that the economy is very strong. And usually you need lower rates because the economy is weak. And the fly in the ointment to his plan is that in order for the Fed to cut rates, that would mean they'd have to get back into the QE business to manipulate the interest rates, the yield on the bonds down, which is another sign that you got a bad economy. So, a lot of this doesn't add up. But the thing that affected gold today was the Federal Reserve not moving on interest rates. And the view is that if they lower interest rates, it'll put pressure on the US dollar, which is bullish for gold. I don't think gold really needs that. Gold is doing just fine all on its own. But the US dollar has a sentiment on the short term for gold. I mean, look at the chart, bottom left, top right. These are trends that go on for a long term. And you all know why I'm very bullish on gold. The fiat currency and debt system is broken. And there's a death spiral of debt in the United States, made worse by the cost of servicing that debt. So that is only going to get worse and worse. Meanwhile, the BRICS nations see this, which is why they're loading up on gold, and gold has a lot higher to go. So when you see these kind of down days for gold, it also has a negative impact on the price of the gold stocks. And that's a good day to be buying because the fundamentals are tremendously strong. Gold's going a lot higher. These short-term fluctuations are a gift on days when gold is down. So that's my views on gold. And I got some really good gold stocks to talk about. But before I get into that, I want to address the copper elephant in the room. As you can see here, copper just fell. It took the escalator up and the jumped out the window on the way down. So what has affected these big swings like this one here was Trump announcing that he was going to put a 50% tariff on copper. Today he announced his taco trip on Trump always chickens out. And I guess the end users of copper or refined copper got a hold of him and said, by the way, President Trump, this is going to be really expensive for us. You might want to tone that down a little bit. So, of course, he did his taco trick and copper got hammered. Uh, but at the end of the day, it doesn't change the fact that the supply chain of copper is broken. That demand is going up, up, and up for various reasons, such as artificial intelligence. That's a big one lately. We've got electric vehicles. We need it for regular industrial uses, power grids, internet technology, cloud computing. Next up is going to be robots, and who knows what's next. And so, the copper miners, they can't keep up with all the demand, and that hasn't changed. And in fact, if anything, the tightness is becoming better understood by more because you look at the refiners, and the refiners are having a heck of a hard time getting the material that they need to refine. And so it's a tight, super tight supply, strong demand. and the Trump's theory that he was going to put a duty or a duty, a tariff, a tax on American consumers. He tacoed out on, but uh, and allegedly it was supposed to be because he wanted to enhance copper mining in the United States. I guess that went out the window with the price of copper too. But yeah, I mean, I see this as a tremendous buying opportunity in copper stocks. And so I've got a group of those to talk about as well today. So let's get on to the topic of the day, which is companies that are in the news. And one of those is Agnico Eagle. My top pick since the early part of 2024 is has been and still is my top pick for a major gold miner, and that's Agnico Eagle. And they reported second quarter 2025 results, record free cash flow with another quarter of strong production and cost performance. Balance sheet further strengthened by transition to net cash position and long-term debt repayment. That's what happens when you produce gold at, what is it, 1,480 or something like that, that they produce it at, and you sell it for 3,300. You can make a lot of money doing that. And that's exactly what they're doing. Now, their CEO, Amar Al said, and I quote, our portfolio of high quality assets continued to deliver exceptional results this quarter, generating record free cash flow, more than doubling the prior quarter. This performance reflects the strength of the gold price environment, our disciplined cost management, and the consistency of our operational execution. While delivering record free cash flow, we remain disciplined in our capital allocation, reinvesting in our business, strengthening our balance sheet, and returning capital to shareholders. We ended the quarter with a significant net cash position and returned approximately $300 million to shareholders through dividends and share repurchases this quarter. We remain focused on executing on our 2025 guidance and advancing our key growth projects to drive long-term value creation. End quote. That's a bit of an understatement when he says operational execution. I think it's excellent in execution. They're one of the most efficient miners of gold there is. And as they say, as he said, they delivered record free cash flow. And by the way, this is a number of quarters in a row that they've returned record free cash flow over the last year and a half as the price of gold has been doing so well. And the second quarter of 2025 was the best quarter ever for the average price of copper or gold during a quarter. And this is what you get when you have excellent execution in your mining operations. Let's look at some of the highlights. Strong quarterly gold production and cost performance. Payable gold was 866,000 ounces at a production cost per ounce of $900.11. Total cash cost per ounce of $933. Here's the one that I pay most attention to. All-in sustaining cost per ounce of $1,289. When your all-in costs are $1,289, and you're selling it at 33, well, 3,300, well, you make a lot of money. The strong operational performance in the second quarter of 2025 was led by Canadian Malartic, LaRonde, Macassa, and Fosterville. At mid-year, the company has achieved approximately 51% of the midpoint of its full-year production guidance, while achieving total cash cost per ounce below the midpoint of guidance, despite higher royalty costs resulting from higher gold prices. Record quarterly adjusted net income and free cash flow. There's a lot of chicanery that goes on with accountants and the way they keep track of everything. But the one that I really care about the most is the free cash flow. And as you can see, they had a record free cash flow of 1.3 billion or $2.60 per share. Uh, 792 million or $1.58 per share of free cash flow before changes in non-cash components of working capital. Again, just look at that free cash flow, folks. 2025 gold production and cost guidance reiterated. You can see that in the news release. Balance sheet strengthened by transition to net cash position and debt redemption. So they've got rid of some of their debt, and now they have more cash on their balance sheet than they do debt. Tremendous flexibility when you can do that. Increased quarterly share repurchases demonstrate continued focus on shareholder returns. A quarterly dividend of 40 cents per share has been declared. In addition, the company repurchased 836,000 common shares during the quarter at an average price of 119. So they got it at a deal for aggregate consideration of 100 million. And update on key value drivers. So they talk about how things are going at Canadian Malartic. Oops, got the wrong thing there. Canadian Malartic, uh, Detour Lake. They are the two of the biggest gold mines in all of Canada in great jurisdictions. Upper Beaver, Hope Bay, San Nicolas. So they give you a rundown on how all their various operations are performing. And at the end of the day, that's what Agnico Eagle is all about, is how well they perform as a mining company, gold mining company. And yeah, record free cash flow. They produce gold at under the average cost of their peers, and they sell it at pretty handsome margins, and that's what leads to record free cash flow. And I expect to see more of that. They have very good controls on their costs, and I expect to see gold much higher before the end of the year. So I think they're going to continue to make a lot of free cash flow. All right. So there, Agnico's my top pick for a major. My top pick for a mid tier is Alamos Gold, and they also reported their second quarter results uh, after the market closed today. They talked about stronger production and lower costs drive record cash flow from operations and solid free cash flow of 85 million while funding growth. So they are spending money to grow their production, and that new production will bring their costs down dramatically. So a lot of what would be free cash flow ended up going into funding their growth, which it puts them in a fantastic position going forward because they're going to be able to bring their costs down to $400 or $500 less than their peers, and that's a wonderful situation. So there's a quote in here from John McCluskey, who's the president and chief executive officer, and he stated, and I quote, production increased 10% from the first quarter, meeting our quarterly guidance, while all-in sustaining costs decreased 18%, reflecting stronger performances across all of our operations. This contributed to record cash flow from operations and a substantial increase in free cash flow to 85 million while continuing to reinvest in growth. We expect further production growth into the second half of the year, driven by a combination of higher grades and milling rates, and remain on track to achieve full year production guidance. Given external factors related to our higher share price and gold price, as well as a slower start of the year at Magino and Young-Davidson, we have increased our annual cost guidance. This is not reflective of our long-term outlook, with costs expected to continue to improve into the second half of the year, and a more substantial decrease expected over the next several years. A key contributor to this improvement will be the Island Gold District, where we successfully completed the transition to processing island gold ore through the larger and more productive Magino mill mid-July. As outlined in the base case life of mine plan issued last month, the Island Gold District will be a driver of our growing production and declining costs over the next several years. We also believe there is further upside to come. Through a larger expansion of the district, we see excellent potential to grow our consolidated production to approximately 1 million ounces per year, underpinning one of the strongest growth profiles in the sector. That says a lot, folks. They're ramping up to 1 million ounces of production per year, and they're bringing down their costs. These kind of situations, they don't come along very often in a gold bull market. In the last gold bull market from around 2001 to 2011, one of the best performing gold miners was Goldcorp. And the reason they did so well is because they were a very low cost producer of gold. And this is why I think Alamos is this gold bull market's version of Goldcorp. And so I think they've got a long runway and a lot of blue sky ahead of them. They give you the highlights: produced 137,000 ounces of gold, sold 135 at an average realized price of $3,223 per ounce, generating record quarterly revenues of $438 million, record cash flow from operating activities total $199 million, a 151% increase from the first quarter, reflecting. You got to watch these quarter to quarter when a company's in the process of building out, because it can affect where their money goes during a quarter. And they're, as John McCluskey said in his quote, they're ramping up to get to 1 million ounces and dramatically bring down their costs. So there's a cost to that, but this is an excellent mining company. They are one of the most efficient gold mining companies in the business. They talk about generated strong free cash flow of 85 million, total cash, all-in sustaining cost of $1,475 per ounce. So, when you're selling it at 23 or 33, 32.23, you can make a lot of money that way. Reflecting the higher than budgeted share-based compensation. They talk about the reasons for that: cost of sales, adjusted net earnings, cash and cash equivalents. They returned $21 million to shareholders by buying 0.4 million shares at a cost of $25.11, and a payment of a quarterly dividend, 10.6. So yeah, I don't need to read all these off you. I always encourage you to do your homework, and and that requires you to look at their quarterly reports. But yeah, everything I see in Alamos Gold I like. As I said, I think they're growing into the Gold Corp of this bull market. Gold Corp got bought out many years ago, but during the great 2001 to 2011 gold bull market, they were one of the best performing gold miners because they were such a low cost producer. And that's exactly what Alamos is on the track to do. And when they do get everything up and running, they're going to have their all-in sustaining costs closer to $1,000 per ounce of production. So if you think like me that gold's going up to $4,000 or $5,000 an ounce in the next year or two, well, they're going to make a lot of money when they got their costs that low. All right. I got a bonus gold miner for you. Now, Kinross is not a company that I've ever picked in my reports, but I wanted to show you just, you look at how good the business of gold mining is for companies like Agnico Eagle, Alamos, but they're not alone. Look at Kinross. Kinross reports strong 2025 second quarter results. Robust margins drive record free cash flow of over 600 million, on track for 650 million in return of capital to shareholders in 2025, and development projects are advancing on plan. Uh, let's see. So let's see some of the highlights. Production, 500,000 ounces of gold equivalent in the quarter. Where's the all-in sustaining cost of $1,493 per ounce? Operating cash flow of nearly $1 billion. Attributable free cash flow record of 646 million. Margins increased to 68% to $22,204 per ounce equivalent sold, compared with Q2 2024. So that's quite a dramatic increase. Significantly outpaced the rise in the average realized gold price. Reported earnings of 43 cents per share, adjusted net earnings of 44 cents per share, on track to meet annual guidance. Cash equivalents, 1,136 million, and total liquidity of approximately 2.8 billion. They talk about that because they want the world to know that they've got flexibility. If they see a mine out there that they want to own through taking it over or building a new one, they got plenty of liquidity to do that. Return of capital to shareholders. They reactivated their share buyback program, purchased 225 million in shares to date of the 500 million minimum plan for 2025. So it looks like they're on track to buy back a $500 million worth of stock. They increased, including its quarterly dividend. Kinross has returned approximately 300 million in capital to shareholders year to date. They declared a quarterly dividend. They gave you some highlights on their projects, and on the operating mines and all the ones they're developing. So again, when you're developing for projects, you need cash, and that's why they make why they highlight their liquidity and cash and what they can borrow. So they're in very strong position. Their CEO, Paul Rollinson, said, and I quote, "Our portfolio mines continued to perform well during the quarter, contributing to a strong first half of the year and positioning us well to achieve our full year guidance." The company delivered a 21% increase in margins of $2,204 $2,204 per ounce, compared with Q1 2025, outpacing the 15% increase in the gold price over the same period. We also delivered record free cash flow of approximately 650 million, which increased 74% compared with the previous quarter. Not many companies are doing that these days. That's my quote, not his. He goes on, "Since reactivating our share buyback program earlier this year, we've repurchased 225 million in shares of the 500 million plan for the year, while maintaining our quarterly dividend and significantly strengthening our investment grade balance sheet. We're excited about our pipeline of high quality developments and exploration projects, all of which progressed well during the quarter. We have strong optionality in our substantial resource base and are focused on drilling, technical studies, and permitting to advance long-dated projects into our production profile to extend mine life with a focus on driving margin growth. We're also pleased to have released our 2024 sustainability report during the quarter, which provides a transparent and comprehensive account of our reporting in this important area. We continue to be focused on sustainability across all aspects of our business, from operations and growth projects to exploration and strategic priorities, end quote. So, there's three companies that are just hitting it out of the park because they're producing gold at about, let's say, on average between those three companies, about $1,500 an ounce. And in the quarter, they averaged out at about 3,200 and let's say $3,250 is what they sold it for. There's not many companies out there with that kind of profit margins in any industry. To sustain that, these companies are all doing the same thing. They're putting money back into the business to replace what they mine with new mines, new operations, increasing their production and decreasing their costs. So, you know, the businesses are only going to get better. Uh, Regardless of what, even if gold just went sideways or even dipped down, they're still going to make a lot of money. But I actually think it's going to be even better because the price of gold, in my opinion, is going a lot higher. So, that's a good time to be in the gold mining business. And the gold mining business is one of the best businesses to be in these days, especially if you care about free cash flow and what you're paying in share prices relative to that free cash flow. When you take those things into consideration, there really isn't very many opportunities out there that offer that kind of reasonable valuation to buy stocks when they're making a lot of free cash flow. So there you go. Those are my three big miners, but I'm going to now talk about a small miner. This is Borealis Mining. They're a sponsor of my reports, and I'm also a shareholder of the company. Borealis Mining is doing some really cool things. I go to their Twitter because they had a couple of interesting updates on their Twitter. Borealis, here's this Bill DiCarlo, who's the site superintendent, stands on the heap leach pad after the successful placement of drip lines. Borealis has begun treating part of the crushed stockpile with cyanide solution, a key step in ongoing leaching and our path to gold production. So they've just beside this heap leach pad here, they have a stockpile. They're crushing that stockpile. It was left over from previous operators, and they're crushing it and they're putting it onto these leach pads, and then they're going to be able to pour gold. And so this makes them a brand new junior gold miner. Now they're starting out small, okay? We're talking maybe 500 ounces per month kind of thing. But what they're going to do is then they're going to start, they've got pits around these stockpile and heap leaches that they're planning to take the material from there, put it on the stockpile, and then on the leach pads. And if you want to learn more about that, also on their Twitter is a link to this interview with Kelly Malcolm, who's the CEO, and Andy Millett from Natural Resource Stocks. And they talk about the path to production, how they're processing the stockpile, putting it on the leach pad. That's going to then the material goes through their recovery plant, and they get gold. They pour gold right on the property, and and they've got all this is all part of their project. They've got all this. They bought this asset, and now they're getting the rubbers meeting the road, or the rubbers meeting the gold, if you will. And so they're a really tiny junior, but I think they're going to grow into a very substantial junior and then on to becoming a mid-tier. And so Borealis Mining, BOGO on the Venture Exchange. And yeah, go check out their website, check out this stuff on Twitter. It shows you what they're doing in real time. All right. Now, another gold company that I'm very bullish on is Nuvau. Well, they're actually a combination. They got base metals, so they've got a project that was a base metal mine in Quebec from one of the majors. It's slipping my mind at the moment. Sorry about that. But they also recently did a drilling on an interesting target. So, okay, if you zoom in here, this is their overall claim block. It's huge. It's 1,300 square kilometers. And right here was the Bracemac McLeod mine. And these underground ramps here and underground deposit was a base metal mine. Okay. And just outside of that workings, they spotted there was a vein spotted on that project, and they drilled 50 meters outside of that. This project it was owned by Glencore, and Glencore was only interested in the base metals. But this project is located in the Abitibi, which is one of the greatest gold districts in the whole world. And it had never been explored for gold. And so they heard about this underground uh, uh, exposure of a gold vein, and so they decided to drill an exploratory hole. And this is what they found. They found in their very first hole a vein, an orogenic gold vein, with a significant amount of visible gold. You know, visible gold in a drill core is pretty rare, actually. And to have one in your very first hole, a discovery hole, is quite spectacular. And they are assaying that right now. I hope we'll have news on that assaying anytime in the next couple of weeks. When I see this much gold, I know what's coming. I'm not going to predict any grades, but I'm sure they're going to have some good kicks of gold in their numbers because, again, this is quite impressive looking visible gold in a core on a discovery hole in a project in Quebec that's 1,300 square kilometers, and it's got a mining permit and everything like that. This is a great outcome to be looking at a VMS or a base metal mining area in a gold camp that had never been explored for gold. To put your first hole down and find this, it's really somewhat unheard of. So take a good look at Nuvau Minerals. They trade on the Venture Exchange. Their symbol's NMC. I'm a shareholder of the company. And so, I like what I see, and that's why I'm a shareholder. All right. McEwen Mining. Okay, now I'm going to get into some copper stories. And McEwen Mining is actually a gold and copper story. They're a junior gold miner that's in 2024, they produced 136 gold equivalent ounces. In 2025, they expect to do about the same. They're bringing a new mine into production that will help them increase that production. And a mine that they were expecting to be at the end of its life and probably wouldn't have been producing into 2026. They recently had spectacular drill results on that, and they've got the underground workings going over to that deposit. and that will extend the life of that mine. So they haven't given any 2026 guidance, but I think there's a pretty good chance that they're going to increase their production in 2026 and also decrease their costs. They have organic growth with exploration upside. So they got really great results from their drilling at their Fox complex in Ontario. It's got a substantial resource of over 2.5 million ounces of gold. They're drilling away on that and have had great results over this year. They talk about the new upcoming mine at Stock. The ground is broken on that. The underground workings are going in, so I think they might even be pouring some gold by the end of this year and ramping it up in 2026. Gold Bar is their project in Nevada, and they got some really good stuff going on in Nevada. I think we're going to hear more about that Nevada gold projects that they have down there in the next little while. So stay tuned and listen for when you hear them talking about Bar and their Nevada projects. Phoenix is their project in Mexico. They've got the McEwen Copper is a subsidiary of McEwen Mining. McEwen Mining, as you can see in this pie chart, owns 46.4% of McEwen Copper shares. Stellantis, the big car maker, owns 18.3%. Rio Tinto has a venture called Newton that's put $100 million into McEwen Copper, and they own 17.2%. Rob McEwen himself owns 12.7%. So, as you can see, this is a very tightly held company, and they're planning on taking it public on the New York Stock Exchange. And I'm really excited about that prospect because, there's not many IPOs these days. The bankers that do that sort of stuff, they're hungry for new deals. And one of the recent successful IPOs of the few that are actually happening was a gold company. So they understand that, generalist investors in the United States want access to mining and they want access to copper mining, companies with copper projects, and there's not many of them to choose from. So I believe when McEwen Copper goes public, that it will be well received. And if there's a super tight supply of the stock, well, if there's any kind of reasonable demand, the stock's going to go up. And the reason that there should be good demand for it is in these other statistics here, they're advancing Los Azules, which is the world's eighth largest undeveloped copper project. The past financings were 453 million. The last financing I think they did was at about for $30 a share. So if you 50% to $30, that's $1 billion. So McEwen owns their whole market value is about worth what this is, and you get the junior gold miner as a kicker. Their 2023 PEA talked about cash costs, 21% IRR, 27-year life of mine, 10 billion pounds of copper, and 20, that's in the indicated category, another 26.7 billion pounds in the inferred. The big catalysts are twofold for the McEwen Copper. One is they're working on a feasibility study and working towards pre-construction in 2025, 2026. And another would be taking McEwen Copper public. So great company, run by a legend in the mining industry, Rob McEwen. He was the founder and builder of the success of Goldcorp. And I think once Los Azules gets in production, it'll be like having a couple of gold corps in one company when you look at the free cash flow it'll generate. So, yeah, this is one of my favorite picks, and I got a lot of good things to say about McEwen Copper. So another copper company, this one's an explorer. And I'm trying to give you some copper ideas because of, when copper gets hammered, in what I believe is overly sold off, there's opportunities in the copper stocks. And that's why I'm giving you some of my ideas on copper companies here. These are picks in my reports, and Hercules Metals had two important news releases out on July the 28th. One was that they arranged a $15 million financing, and the other was that they acquired 73 square kilometer claim belt around their Leviathan copper discovery in Idaho from Barrick. And Barrick's giving them the asset at under what it cost them to stake that ground. And this enhances Hercules, and it also enhances Barrick because Barrick owns a big chunk of Hercules stock. So, and they don't really have the bandwidth to be doing the exploration. And the guys at Hercules have been at it in this area for a few years, and they do have the bandwidth. So it made a lot of sense for Barrick to do this deal. They'll have about 20% of Hercules metals. So they'll have the foot in the door. If Hercules has an important mine of the future, you can pretty much guarantee that Barrick Gold is going to, or Barrick, sorry, is going to own that and or at least own a big chunk of it and help develop it. And they talk about the highlights. I dealt with this the other day, but the real big standout to me was this map here. This in green here is what they got from Barrick. In blue is what they got. That's where they made their discovery. And what really stands out the most to me is I see some very important structures coming up and through this claim and into right where um, Hercules has made their discovery. So this is a very prospective belt of rocks in here. It could be a cluster of porphyries. These are big copper gold deposits that can be very profitable. I think it's something like 25% of the copper that's produced worldwide comes from porphyries. I might be understating that actually. You can do a Google search to find that out. Needless to say, porphyries are an important source in the world for copper. And now Hercules has a new discovery that they're making very good headway on with their geophysics, their geophysical modeling, the modeling of what they've done with the drilling. They're putting more drill rigs on there, and with this acquisition, they're going to need even more money. So yeah, I'm really positive about Hercules, and I like what I see here with these structures that basically go all the way through Barrick's ground that will now belong to Hercules and up through Hercules ground as well. So they're looking for a whole cluster of porphyries. And another interesting thing about porphyries is they can often have epithermal veins coming off of them, and a lot of great production of silver and gold comes from epithermal veins that are high grade, low cost to mine, and they could have a whole bunch of those as well. So I'm really optimistic about this deal, and that was a copper idea I wanted to bring to you. Generation Mining. Uh, they have you could see copper and palladium because they've got a project that the economics are really driven by the palladium and copper. And they recently got all their permits to build a mine on this project. And it's in northern Ontario, right beside the town of Marathon. The Trans-Canada Highway goes right through their project, and there's power lines going through their project. They're right beside the town of Marathon, so it's great logistics, great access. The governments all over the world are talking about the need for um, critical minerals, and can't get much more critical than copper. That's about as critical a metal as you can get. It's the most critical, in my opinion. Uh, so this shows you their claim block. They talk about palladium. They're going to produce in their feasibility study 168,000 ounces of palladium. It's recently had an important breakout, and I think it's got a lot higher to go. And so they produce 168,000 ounces of palladium, 42 million pounds of copper annually, and 38,000 ounces of platinum annually. Give you some reasons why you want to own copper, all the needs, and look at the copper supply. That's a good chart for you to look at. They talk about the importance of palladium. You need it in catalytic converters and in internal combustion engines. You need it in hybrid electric vehicles. They talk about hybrid electric vehicles use more palladium than traditional internal combustion engines. This is an important transition form of transportation, automobile transportation. They give you some more statistics. They talk about their feasibility studies, and at the end of the day, this is going to be a mine. And there's not very many. If for in like when I'm bullish on a metal, I like to look at the stocks, the metal stocks that have those metals. Well, there's not many uh, companies in the pipeline for copper, new mine development copper projects, and there's even fewer for palladium and platinum. And Generation Mining has that combination, copper, palladium, and platinum. They got a very modest valuation. I recently did some interviews with their CEO. That'll give you a good rundown on what they're doing. So yeah, check out Generation Mining. Next up is Power Metallic. I just interviewed their CEO, uh, Terry, just a couple days ago. And their last couple news releases are important. They demonstrated positive initial mineralogy results. That's easy for me not to say. They acquired additional ground, so they've been able to increase their land position quite dramatically. This hatched line area is where they've made their high grade copper and base and precious metal discoveries in here. Then they acquired these uh, blue claim blocks over here. There's an important contact between rock packages that makes this whole area very highly prospective, because you see a similar thing happening up here where they've made their new discovery. So they've got good metallurgical work done. They've increased their land package. And this is the most important part, is they had an update on July the 10th of their exploration drilling. So they got a very busy season of drilling going on. It'll go on, they'll have drilling and drill results out until well into next year. This zooms in on what they're drilling. Lion is their fantastic new discovery. The Nisk is a nickel deposit, Nisk East. only has a few holes in it. They're going to drill this more, all this untested area. This will be a big part of their drilling, but they think they might have a look-alike of it just right over here. And I interviewed their CEO. Oh, this is a good one. So this is a cross section. You see, it's like you cut the earth, and you can see the side of it, like you're looking at the cut part of a cake, and you can see the distribution of their high grade copper base metals and precious metals. And there they show that new claim block. And yeah, they've got a great story. To look at the grades that they're getting is just off the charts, really. And that's why they've been able to get investors like Robert Friedland's an important investor. Rob McEwen's an important investor. They have other very high net worth investors that have made their fortunes in the mining industry. Gina Reinhardt from Australia Mining Hall of Fame kind of person is also a big shareholder. They got great people on their team. Yeah, when you get a great project, it tends to attract great people to work for the company and also to invest in the company. And they have mining legends invested in this company because of the extreme high grade that they've drilled, discovery that they've drilled into. They recently started cranking up their drilling again, and it's another one for you to check out. Power Metallic. I just did an interview with them a couple days ago, so look on my YouTube for that. I'm going to have to rush through the next few here. One of them is Almadex. They're a new pick for me. What I like and what has me excited is this Almadex commences diamond drilling at its Paradise project in Nevada. This was on June the 17th. So, over the next few weeks to a month, they could be coming out with news of this. They're looking for a porphyry in Nevada. Nevada has not been, it's been well combed over for gold, not so well covered for porphyries. And their CEO thinks that that's what they have. And he, sharp guy, him and his father have done this before. And a few times they've found mines, and looks like they're honing in on another one. And Dwayne Polican, who is the chairman, said, and I quote, "Our work has defined a vector towards a potential core of this large alteration system, and it's very exciting to now be drill testing this model in this 2025 drill program." End quote. Short but sweet. He's telling you that they've been doing the work to vector in, and they've got a good lots of indicators that they're sitting on top of a porphyry, and now they're drilling that target. And yeah, it's a really interesting company. I'm looking forward to seeing their assay results from that. So Almadex is another one you want to take a look at. And the final company is also a new pick of mine over the last couple of weeks with a company called NorthIsle Copper and Gold. On July the 17th, so a couple of weeks ago, they announced that they upsized their financing to Canadian $35 million, dollars, with 5 million of that coming from Wheaton Precious Metals. Wheaton Precious Metals is one of the best run streaming companies. So this company does their business is to help with the capital cost to build a mine, and then say it's a copper mine and it's got a little bit of gold in it as well. They get that gold at a discounted price for helping a company build the mine, and that's their business model. But in this case, that's not what they're doing. They're just investing in North Isle Copper and Gold, and that's because North Isle. So they started out at a $30 million financing, and then the next day they upsized it to 35 million. And Wheaton Precious Metals was announced to be a $5 million investor. They talk about announcing on the second, so a few weeks ago, announced near surface intercepts and higher grade intercepts at depth at the West Goodspeed on its North Island project. Let's have a quick look at that. I'm running a little long on my show here, but let's just look at that. So 47 meters, grading 0.70% copper equivalent from 100, starting at 155 meters. So you know that these days that's a very high grade copper equivalent number for an open pit target. They talk about some of the other hits that they had, 19 meters at almost a full percent. You know, a lot of mines these days are less than a 0.5% of copper equivalent, so they're looking good with these kind of numbers. Sam Lee, who's the president and CEO, stated, and I quote, drilling at West Goodspeed continues to reinforce the potential for the near surface uh, deposits in this northwest corridor. We are encouraged by the continuity of mineralization, including in the higher grade zones at depth. The intercepts observed in multiple holes underscore the strength of the system outlined at West Goodspeed during the 2023 and 2024 campaigns and the growing understanding of the mineralized system in this area. End quote. They've got a pretty sizable deposit. And, you know, that's why you get companies Wheaton Precious Metals that wants to invest in them and others. You know, that's a significant amount of money. $35 million for a junior these days. That's a very substantial. And these guys are really good at using their money intelligently. And I'm going to try to get them on an interview. And Sam Lee is very good at explaining their project and their business model, how they're planning to unlock shareholder value. You know, for me, it's a really impressive project and looks like it's going to be a future mine. Wheaton Precious Metals doesn't invest because they want to make 10 or 20 cents on the stock. They do it because they think there's a mine there and that they could end up having a streaming deal on some of the precious metals in that copper and gold deposit, and that's their business model. It's not very common for them to make an investment of 5 million. So take that for what it's worth, but I think it's a really important development. All right, that's the show. Do your homework, speak with your financial advisors. I'm not making buying or selling recommendations. That's up to you and your financial advisors. I'm merely an idea generator. I try to bring you good projects, companies to look at, and I give you some insights from my 32 years in the exploration and mining business. And so that's what I'm all about, is being an idea generator. And it's up to you to do your homework and speak with your financial advisors before making any investment decisions. Have a great day, and we will talk to you soon.